Let's bring in Anthony Chan. He's the former chief economist at financial giant JP Morgan Chase. Anthony, great to see you as always.
Glad to be here with you.
First, I'd like to get your reaction to the Q1 China GDP numbers, given everything that is going on right now.
Well, it was certainly an impressive number because it came in much stronger than the street was expecting. They were expecting a number that was about 0.2% lower. But you have to keep in mind that January and February were very good economic growth months for China. But as these COVID-19 shutdowns began in March and certainly continued into April, we see that weakness persisted and weakened those GDP numbers. So what we see and hope that in the second quarter, we know already that there are going to be some weakness because of April. So the hope and expectation is that the second quarter will be sort of a reverse of the first quarter, where the first 2 months were strong. And then, of course, March was weak. We are hoping that April will be weak, and then we'll get May and June so that we can somehow salvage the second calendar quarter. But nonetheless, for the entire year, I think that the Chinese economy will be relying very heavily upon infrastructure spending. That's increased government expenditures, of course, and will also be relying on easier monetary policy. And you already saw that with the decline in the reserve requirement ratio. And the hope and expectation is we'll also see the loan prime rate coming down in the not too distant future to give more support to the overall economy.
Right. You know, you and I talked about China's strong growth predictions for this year, ahead of this year. But talk to us more about some of these domestic challenges that you mentioned with consumer spending, also some unemployment numbers coming out a little bit higher than expected. How does that play into all of this?
Well, it's really not a real surprise because if you have these COVID shutdowns, you're going to see that consumer spending is going to be weak, as many of the stores and restaurants and places that consumers frequent were just not available. The good news is that the factories did a lot better, and that's the reason why you saw industrial production coming in much stronger than the retail sales number that came in down on a year-over-year basis. The fixed asset investment also reflecting the infrastructure spending coming in a little bit stronger. So we're going to have this year the consumer, specifically services and consumer products, sort of being the weak link for the Chinese economy this year until these COVID shutdowns are behind us. There is some hope that the Chinese are not going to abandon the zero COVID policy, but they're going to tweak it in a sense or in a manner that will be supportive of economic growth to make sure that as the year progresses, that economic growth is not hampered too much by these COVID shutdowns.
Anthony, I want to get your take and pivot just for a moment on where things stand between the United States, we're certainly seeing some of that here, and China when it comes to trade and their trade deals.
Well, we know that in this kind of an environment where the Chinese economic growth is just a little bit softer at the moment, it's going to be hard for the Chinese economy to import as many products from the United States as we would like. My hope is that as the year progresses and the COVID scares and concerns die down, that imports will pick up. It is no secret that trade between the United States and China is more favorable to China. For example, we import 3 times in the United States more in goods than we export to China, so very favorable. And for the United States, we know that importing products from China increases the purchasing power of U.S. consumers by several thousands of dollars. So both benefit, but in terms of the trade imbalance, China, of course, benefits a lot more, and the U.S. benefits from the perspective of being able to increase our purchasing power here in the United States. So I think it's a mutually beneficial relationship, and we hope that it will continue to remain that way.